Hey.
Chris, how you doing, mate?
Yeah, good man. How are you?
All good, all good, all good.
Good,
Yeah, looking
good.
forward to the week and today's session. Should be fine.
Yeah, looking forward to it. Looking forward to it. It is horribly cold in my office today.
Yeah.
Yeah, we've been hit really badly by the storms as well. I don't know. Did you get hit by the storm over the weekend?
No, I haven't. No.
Not.
Whereabouts are you at?
I'm in the Cotswolds. On the Cotswolds, kind of over like southwest-ish area.
Got it. Yeah, okay, cool. No,
Yeah.
no. But it's cold though. The weather's dropped.
Definitely. Winter is here. Is your Christmas tree up yet?
It's not up because I don't celebrate Christmas.
Oh, do you not? Okay, fair enough then.
I know. But might put some lights or something just to decorate it. You know.
Yeah.
A little bit, but not like the whole Christmas stuff.
So you don't get involved like at all with like presents or anything like that?
No. Presents, yeah, but the whole Christmas stuff, no. And this is only recent. I've been celebrating Christmas my whole life, but since I sort of reverted to Islam, like 7 years ago, kind of changed the.
No way.
Yeah.
I bet that must be a bit of a culture shock.
It's cool now.
It's so ingrained, isn't it? It's so ingrained in like British culture, Christmas.
Oh yeah. No, 100%. But I think my kid will probably just have it somehow anyway because of it's integrated into the system and everything.
Yeah.
But overall, the whole Santa and Jesus, all that stuff is different. But anyway, back into the subject. What we're doing today, backtesting, right?
Backtesting, yeah. Effective backtesting technique.
Backtesting. This is going to be an important session for you guys. If you guys actually take note and actually implement what Chris says and myself, honestly, it's going to save you. Don't just watch this live stream like a zombie. Actually take note and implement it. Engage in the chat. So it's going to be an amazing live stream for you guys.
I think the first big question as well that we need to ask, and this is for everyone who's watching right now, and we want you to put in the comments as well, just your honest opinion. And there's no judgment here either way. Is how many of you actually backtest? And I mean, not just like you do it like once a month for 30 minutes. I mean, like regularly backtest. For example, me personally, I spend 20 minutes backtesting every single day. Okay, every single day without fail, Monday to Sunday. I backtest for 20 minutes. I'll go and look through charts. I'll mark up charts. I'll record. And look, we maybe have a little bit of an advantage because we've got students that rely on us for this sort of stuff. Mm-hmm. So we spend a lot more time analyzing and things like that. But I'm effectively logging trades and recording them on my trade journal effectively. I'm doing that every single day without fail. And every single month, I've got something new that I want to focus on. So how many of you in the comments, and just put a Y or an N, that's it, yes or a no. How many of you? It'd be really interesting to see. Those of you who are watching right now, if you're on X, if you're on YouTube, just put a Y or an N if you regularly backtest. So Y if you regularly backtest, and N if you don't regularly backtest. I'd be really interested to see what the common opinion is.
100%. And I think most of the viewers today are on X. So we'll probably have to check X and see where they can comment. So we won't be able to see it if they're on YouTube or Facebook. But yeah, I'll be looking at X for now. Okay, Mazone, Matt, glad you can make it. Regular, that's fun. Yep.
Love it. Well done. Welcome. See if we've got who else we got in the comments today. Are you regularly backtesting like M Zone, or are you not doing it? And if you're not doing it, then that's kind of look, there's no judgment either way. Hey, M Zone. There's no judgment either way. These sessions, we build them to ultimately help you and help you progress as traders. That's what they're for.
100%.
Welcome, Lawrence, as well.
Lawrence, so let me just get my mic. Got to put it. He goes through his journal and then forward test cherry pick to help improve. To be fair, I do something similar to Lawrence. I do a lot of cherry picking, look at trades that I've missed and everything. Yeah. When I do I'm currently doing a back test to improve my entry on my risk reward. That's when I'll spend probably an hour a day for a few weeks. Yeah, I'll do that. But normally I'm very similar to Lawrence, just to keep the muscle memory going, just to stay sharp. Yeah. But when you're adding something new, that requires a lot of hard work. So I'm quite excited on something that I've kind of developed recently. It's going to take me a while to get the data.
Yeah.
It will improve my risk reward so much. But I'm like you, Chris. I get excited when there's an opportunity to improve. I love it. You know?
Yeah, that's it. There's always something to work on. There's always something to master. There's always something to develop, right?
100%.
That's it. So let's start right at the beginning then. So what is your opinion of what backtesting is? What is backtesting? Why do we backtest? Give the team, give the viewers an introduction as to what backtesting is and why we do it.
Backtesting is confidence, right? If you have confidence in your strategy and you've got the data to back it, you're going to go to the live markets with confidence. You've got data to back it, and emotions, you're going to be able to control them more. If you don't backtest, and if you backtest every now and again, and if you're just trading, what's going to happen is when you enter a trade, then emotions will come in because you don't have the data to back it. You don't have the confidence. If you don't have the confidence, then you might come out early. You might hold losers longer. Your winners you just don't know how to hold your winners because you don't have the data to back it. So for me, backtesting is essentially not just confidence, but it's also the training field, right? You know, if you're I always refer to this analogy. If you're an athlete, you're probably performing. Let's say Bolt, right? He'll perform a 9-second race in the live markets, but he's constantly backtested and training in the back end, right? Yeah. That's the best sort of analogy I can give. So confidence and it's you're training for the live event.
Yeah, definitely. I think, there's the culture in trading is a bit broken. And we speak about this quite a lot, that the culture in trading is you either go to YouTube or you find a mentor and you get taught by them how to trade, usually by watching videos of them trading. Now, again, similar to Diego's analogy there, let's use Usain Bolt as our example for today, okay? If you go onto YouTube now, or even if you go and you get mentored by Usain Bolt himself, okay, watching videos of how they perform and how they perform well, or even watching videos of how they train for their particular sport, is typically not going to get you to the level that you want to be, which is competing with Usain Bolt at the Olympics, okay? And I think the culture in trading is a bit broken in that people think that they can, because it's so accessible, because there's so much information on YouTube, people think that they can just go and get this information and then ultimately they can become a master trader. Well, a lot of people neglect the work that it takes to become a master trader, right? They neglect, sorry, I've got hair in my mouth. I need to get out. They ignore the fact that they need to put work in. And so what they do is they watch these videos, then they go to live markets, and they wonder why they're not making any money. Backtesting is your drills, right? It's going to the running track and spending maybe hours running and training and drilling, because you get to practice in a situation where you're not losing money, putting money at risk. You get to control the environment as well, right? So you can train a specific entry model, or you can train a specific time of day, and you can go into the charts and you can look at every single, let's say it's the time of the day, you can go back the last 4 weeks and look at the last 8 o'clock session every single day for the last 4 weeks, and then look and study how price works and how price operates. And that's what backtesting is ultimately for. It's to refine your edge, it's to hone your skills, it's to make you a better trader, and to control the variables as well, because that's one of the things you can't do in live markets, right? You have no control over it.
Yeah, absolutely. I mean, even your risk reward, your risk management, your actual strategy, it also needs to resonate not just with you, but your time zone, the type of trader you are. For me, something really important. It was back in the day, I used to aim for 10, 20-yard trades, right? Please don't shoot me there, right? But the risk reward, every now and again I'll get a winner, but the win rate was 20 to 30%, right?
Yeah.
And it was stressful trying to catch it. Then I gradually started redefining it, and instead of I started putting my break even a lot sooner when I saw 2-3R. That never worked. Over time, I put my break even after taking some profit. That never worked. So it's just something that you just keep on refining.
Yeah.
Now it's gone down to, I just come out 4R. Anything above 4 hour, I'm not even in the trade anymore. And I move my stop loss after there's a second break of structure with 2 counter candles. So it's something that you just constantly improve.
Yeah.
If you are, for example, a swing trader, I'm sure there's many swing traders here, right? And you probably average, let's say, 3R for probably a week, more or less. How many trades are you guys actually taking? You know, I'll probably say one or two, but then you probably miss a lot of trades. And then if you've got the data, if you've actually recorded the data, you've missed these trades, you need to ask yourself, why have you missed them? Right? Like Chris said, it's the time. It could be a lot of other factors. So you just have to gather these data, guys. Honestly, you have to put the work in.
Yeah, definitely. And, you know, there's so many challenges that you've got as a trader anyway. There's so many challenges already, you know, variables of the marketplace, you know, what you're up to in the day. Maybe you work full time, you know, maybe your phone's died and your alert didn't go off or whatever it may be. There's so many variables in the marketplace already that what I think backtesting allows you to do is to have a bit of control over those variables. And just because it's really difficult in live markets, future testing, it's really difficult unless you're very experienced like me and Diego are. It's very difficult to put the right rules in place so that you can test things. So Diego, I'm not sure about you, but for me now, if I've got something new that I want to test, I'm pretty good these days. I can kind of future test it, but that's taken a long time for me to develop that skill. And I've had to learn the hard way so many times. So, you know, if you want to test something out, testing it in live markets is really difficult because there'll be variables that are happening in the markets that you as an inexperienced trader are currently not aware of and are currently missing. So you might get false information in live markets. You might get a strategy working better, or worse still, you might actually think a strategy doesn't work because you've traded NFP week, for example, and you've tried to trade a new strategy during NFP week, which is notoriously difficult to trade. And as a result, you've then said, well, this strategy doesn't work. I know I've been really guilty of that in the past, where I'd like have a new strategy and I would try it for a week and be like, it doesn't work. It doesn't work.
Absolutely. There's something that happened to me back in the day, which was I used to backtest on TradingView, upload the data onto Excel.
Yeah.
And I was lying to myself a lot of the times, right? And this is where you get the false information, where you press play on TradingView and then you either miss it by a few candles or it goes forward a few candles. And let's say you've missed the trade, you'll put it anyway because you'll say to yourself, if I was watching a live market,
I would have got it.
I would have put it in, or vice versa if it hits a stop loss. So that information, you're getting the wrong data. Then when it came to the live markets, even though my data suggests, this strategy is amazing, I was struggling in the live markets. You know, I was actually struggling. I had no confidence, below 50% win rate, and I'm all over the place. So obviously, if you really want to take it serious, probably get something like FX Replay, where it does not allow you to press pause or go back a few candlesticks to go back to the trade that you would have missed, or adjust the risk reward just to lie to yourself. Right. So get something like FX Replay. I'll recommend that. You know, that's a really good software. What do you use back in the day? I know now it's probably a little bit different, but to get that raw data.
I have a bit of a love-hate relationship with FX Replay. I have really good times in it and really horrible times in it where I know I'm profitable. I know I can make money in the markets, and sometimes I'll trade on FX Replay and I just can't seem to make my strategy work. It's really strange. And that's because I think a lot of my trade entries rely on how the candles move. So not just how they end up printing, but like the speed that they move, for example. So if I'm looking for a good reaction from a particular liquidity point to get my eyes perked up, then I will see something come in and out of a liquidity area quite quickly. And the replay tool, sometimes when you are monitoring price, it moves so quickly that you can miss things.
Yeah, exactly. So you're aware of that. That's extremely important. That's going to affect your strategy.
These days, nowadays, because my strategy hasn't really changed now in quite a long time, I just do. So I have a rule. Every trade I take, I have to backtest 2 trades. So when I'm filling out my journal, I have to then go and backtest 2 trades. Okay. I don't mind, actually. I can show you guys my journal, actually. I'll show you the one that I use. It's just one that I built myself. There's plenty of journal tools. I know that CTI They have a journal tool that you can use as well, built within them. I've got a couple actually. So I have something that we've actually discussed this previously, called the strategy tester. So what I do with mine is, I'll share my screen. So this is kind of my backtesting strategy tester effectively. What this does is it tests various different take profit levels and break even levels and things like that. So these are the actual trades and the actual results of the trades. And then across here, we have also sorry, 2 seconds. Over here, we also have a ability to kind of test different trading strategies at the same time, which is pretty handy. But then my day-to-day journal, I just use something like this. This is just a re-edit that I've done quite recently for some of my guys. And it's just really simple. Is it a back-tested trade? Is it a live trade? What date did you take it? The pair, the time, lot size, risk, what the result was. The most important thing for me is just acknowledging when I'm following my strategy. So that was, for me, one of my big things, is making sure that I was following my strategy. So I have these like check boxes here, which then are like my 6 checklist points that I want to be met every time I take a trade. And this is just a really good way of me understanding, how well I'm performing as a trader. So have I got my daily and my 4-hour in line? Have I had a 15-minute liquidity sweep? Have I had a shift on the 1 minute? Have I got my entry model? Can I easily get 2R out of this trade? And can I get 4R at my final target? Those are the key criteria that I want to be met. And so the way that I kind of use my journal these days is really just to make sure that I'm trading in the right way. But I think it's really important for newer traders to not overcomplicate it. So the worst thing I think you can do is sit down for an hour to backtest, because you'll complete that hour and you'll probably never do it again. You won't. It's just mind numbing, and it is really boring. So I have a rule: every trade that I take, I will then backtest 2 trades that same day. So when I'm journaling it, I've then got to go into the charts and I've got to backtest 2 trades. I've got to go and find 2 trades that I would have taken, mark them out, put them on my journal, log them, mark out why they worked out. And that for me is really good to kind of get my eyes dialed in and to make sure that I'm always monitoring and watching, where I should be doing, what I should be doing. That's how I backtest nowadays. And, it might take me 20, 30 minutes to fill out my journal, get all my trades down. Then if I've taken 2 trades a day or 3 trades in a day, I've then got 6 trades that I need to go backtest. So my sessions are never longer than 20, 30 minutes tops.
Perfect. That sounds very effective and efficient. And that's what you want to do. You don't want to overdo it. It's like if you're an athlete, you don't want to train for many hours throughout the day, because you're not going to perform when it comes to a live event, because you haven't really recovered. Same thing with trading. Sounds like what Lawrence is saying as well. Sometimes I found that when he's on FX replay for too long, his results gets worse, probably because he's in front of the charts for so long at one time. It's different to live trading. Live trading, you're just there for like a few minutes, an hour, you're waiting for the trade, and that's it. So yeah, that makes sense.
Yeah. And I think you do get to a point where, especially with replay tools, is you get to a point where you start like not breaking your rules necessarily, but you start blurring the lines. I've noticed that as well, Lawrence, where you take a trade and it works out well, and the start of your trading session goes really, really well. And then you start maybe going through the bars a little bit quicker. Maybe you haven't done as much analysis. Like I'll set up my charts. If I go to FX replay, I'll set up my charts like they're live markets. I'll look at my daily, I'll look at my 4-hour, I'll look at my weekly sometimes as well. I'll do all my momentums and see where the money is flowing from and to. In the first couple of trades, they'll work out really, really nicely. And as it goes on, I think then you just start blurring the lines, because you want to kind of track as many results as quickly as possible, don't you? And then it starts failing, and then you get frustrated often as well. And then when you get frustrated, you start revenge trading on FX replay, which is quite an interesting one as well. So it's one of those things, FX replay. I think Lawrence really just supports the same theory, right? Is that little and often is often the best way with trading tools and replay tools and things like that. Just a little and often, small stints. Go in, do 3 trades or 4 trades, really high quality trades that perfectly match your strategy, and then come out. And do you know what? If you want to, let's say you want to have a big day of back testing, go and do 10, 15, 20 trades, but split them up over 3 or 4 trades throughout the day. And then, you know, making sure that we're logging them. So FX Replay is a good one because it's got a journal in. The CTI dashboard as well has a journal in that you can utilize.
TradeZeller as well. I've been using that one. It's pretty decent.
TradeZeller, yeah, I've heard good things about that one. The most important thing is that you're gathering data, because that's what this is all about, right? It's gathering data, okay? And making sure that you are building a selection of data. For example, if I'm trading something and I'm trading something new, I want at least 100 trades. That's my rule. It can be live trades, can be back-tested trades, as long as you make sure your live and your back-tested are very, very similar. Okay, if you're getting like a 20% win rate live, but an 80% win rate back testing, then something's not right there, right? Okay, your back testing results are going to be slightly better, than your live testing results. Of course they are, but they shouldn't be 20 and 80. It should be more like maybe like 40 and 50 or 50 and 60 or something like that.
Yeah, exactly that.
You've gone blurry.
Oh, I know, the camera was acting up.
What have you pointed so that you're in the center of it?
What do you mean?
So at the moment you look like you're in the bottom half of the screen. Does it center, focus up, or maybe like come into it and then draw yourself back?
Yeah, it's the same thing about do this, isn't it?
Oh yeah. Maybe it's looking for a face though.
I don't know. Probably need to get a new one or something.
Strange. So yeah. Look, ultimately, the importance of this is to make sure that we gather this historical data, right? That's what we're looking for. We're looking for data because, you know, if you can then go to the markets, with 100 back-tested trades, there you are. Hey, he's back. If you can come to the markets with at least 100 back-tested trades, you're then in a position where you can see that you've got a 60% win rate. Think about what that's going to do for your confidence levels. Like Diego said at the start of this session, it's all about confidence. You probably know that your strategy works because if you're sensible, you've learned it off somebody who's already using it to make money, right? So you probably know that the strategy works, but you don't believe the strategy works because you haven't seen it working yourself. And it's that belief in the strategy that makes sure you execute your trades whenever they appear and you don't close those trades early if they don't move as quickly as you want to in your direction. I think that's one of the biggest things that backtesting does as well. Gives you the ability and the skill set to hold your trades, to hold.
Oh yeah, 100%. That's Without that, you can't hold trades essentially. Yeah. Literally. Regarding the CTI dashboard and the journaling tool, have you used it before? So you can walk through.
Personally, I haven't. No.
Fair enough. I haven't as well. Then, but apparently, it's really good. It's really effective.
Yeah. So M-Zone's asked, do we pay for these? Yeah, so most of the tools that we've spoken about, you would need to pay for. I don't really think, unfortunately, there are any free backtesting tools. So TradeView is probably the most cost-effective one. The Pro has a Black Friday deal on at the moment. You can get, I mean, if you're in the UK, it might be different other places. I think it's 120 quid for a year or 13 months worth of access at the moment. That will give you access to the replay tool, which is a good one that you can use and utilize. Does TradeZeller have a backtesting tool inside? Or is it just a journal?
No, they go a backtesting tool as well.
A backtesting tool. Do you use it much?
I've started using it for a new backtesting entry model. And I'm trying to. So all my entries are normally based off the 1 hour. Still get 4 hours somehow.
Yeah.
But I can definitely redefine it for a 5-minute entry with the same targets, but I'll still come out 4 hour, meaning I'll just get 4 hour a lot faster than holding the trade for like 1 or 2 days. So I'm in the process of sort of doing that. So they've got a pretty decent backtesting tool as well. Could
you show us how it works? Are you able to log in and just show us just a couple of like random trades so we can show it in practice?
Sure. Let me get it ready.
I think it'd be good to show. I think the how you can how these backtesting tools work ultimately. But the backtesting tools, M-Zone, they are something that you have to pay for typically. Like I said, TradingView is probably the most cost effective. If you didn't want to do a full year of TradingView, I think it's about 15 quid a month. whatever it might be in your home country. If you're not in the UK, you'll need to have a look. That will give you the replay tool. You can then go replay price and then play through price and wait for your setups to occur. Put on your trade tools. Just while Diego's loading that up, I'll show you.
Ready anyway.
Say again.
Ready.
Okay. Well, Diego's going to show us. Yeah, you can put your trade tools on, and you can do it in terms of your journal. So, if you want a paid for like a journal like TradeZella, like Diego's talking about, that will cost you about 50 quid a month. They're not cheap because the tool is really, really good. If you don't want to invest in the most important thing, and this is one thing that I think I want everyone to come away with from today, is the most important thing is that you are backtesting something. You're doing something. You're logging trades and gathering data. Even if you don't know what you're going to do with that data yet, you're logging it and you're putting it on a spreadsheet somewhere. Google Sheets is free. The chart that I showed you a moment ago, I built that. No one taught me how to build spreadsheets. I just went on YouTube and I learned how to build a basic spreadsheet. ChatGPT is really good for spreadsheet building as well. So you can ask it how to do certain formulas and it will give you the code and you just copy and paste it these days. It's really, really good. So every single one of you with enough time and effort could go into Google Sheets today and build yourself a basic strategy testing journal. Okay, log the pair, the time, entry models, things like that, and everything that you saw on my screen a moment ago, I built that myself in a day. Okay, it took me an hour or two. Now I've got quite a good Excel knowledge. I've got quite a good knowledge of this stuff from the past, but I just taught myself how to use it. So it is something that you can just learn from ChatGPT and YouTube. So the most important thing, M-Zone, I'll come back to this, is that you're gathering data of some kind. Every time you take a trade, that trade should be logged somewhere. It should be logged with a result. Even if you just logged whether it won or it lost, you'll start to notice patterns. After 100 trades, you'll start to notice patterns. A simple one to log is the time of the day you take the trade. And then you might be able to see, well, actually, every time I take a trade at 8 a.m., I'm winning. Every time I take a trade at 7 p.m., I'm losing. So maybe I just cut out those 7 p.m. trades. Now you've changed your win rate from 50% to 58%. It could be like, and that's the purpose of it, right? Is to, I think, as traders, we naturally over time become better at. I don't think we get that much better with our strategies. I think we can become better at filtering out bad trades.
100%. Yeah. I mean, it reminds me of when I'm holding a trade and emotions start coming in. I've only been in a trade for like 3 hours, and I know based on my data, my winning trades that normally hit TP, they last around 12 to 16 hours on average. Yeah. So that kind of gives me the confidence I need to hold the trade longer. Don't get more. Again, it's all about data. Cool. Let me share my screen real quick.
Yeah, exactly, M-Zone. So yeah, perfect example. Every time you take a trade on London session, you win most of it. Yeah, and that's because there's a load of volume. You're already noticing those patterns. That's what, you may not have logged every single one of those trades on a journal, okay, in order to find that out. But you've effectively in your head, let's say you haven't used a journal, but you just noticed, your brain has effectively become a journal. You've logged the fact that you take trades, and you've logged the fact that they win more often than not when you take them in London. Now, the problem with that, if you don't use a journal, and you haven't said, I don't know, M-Zone, whether you do or don't use a journal, but the problem with that when you are not using a journal is you run the risk of spotting patterns that aren't there, or potentially having developing biases. So you might think something's happening when it's not. And that could be good or bad. That could be you're ignoring something bad from happening, okay, which you don't want, ideally. Or it could be you are cherry picking when something's working out well. So a journal or a backtesting spreadsheet or whatever it is that you use, they're completely impartial, right? They're completely impartial. They just give you raw data, and then you can analyze that data effectively. Let us know, M-Zone, if you are using a journal, and look, those of you who are watching along as well, let us know if you are. What is your process at the moment? What are you backtesting? How are you backtesting? We'd love to hear from you guys. We sit on these sessions every single day to try and provide you with as much knowledge as we can. We'd love for you guys to come back to us and give us some understanding and information on how you're doing these things as well, because then we can have a chat with you about it. So if you're on this, Jabir, welcome Jabir, good to have you on, dude. If you're on this session, just let us know in the comments, like M-Zone's doing. Let us know in the comments how you're backtesting, what you're backtesting, how you're logging stuff, if you're logging stuff. Just come and speak to us, come say hello, and we can interact with you and have a bit of a chat.
Yeah, absolutely. Cool. Let me just show you an example of how you can backtest. So this is just an old backtester, M5. So I'm doing the same strategy, but this time redefine on the M5.
Yeah.
So go to play. Okay, and where we at? So let's the old indicators on.
So it links up through TradingView then, does it?
Yeah.
Okay, cool.
It's got the same data, yeah. Okay, so it doesn't really have the. So I'm just gonna be monitoring the time. So for example, you want to press play. Hold on, let's speed it up a little bit. Whoa. See, this is what you don't want to do, right? Perfect example. So if you mix it up and then you don't want to go back, a few candles because you would have missed a trade, for example, that's, you're going to get the wrong data. Yeah. So it's because I'm on the M5, that's why. So let me just speed it up. The thing is, if I look for an actual trade, it can take like a whole hour. So instead of me looking for a trade, I'll just show you probably a trade that let's see if I can look for a trade though. Tell you what, because this is a mess, I'm just going to delete everything real quick. Just delete this quick.
That's an order, I think. That's an in profit trade.
Okay, let me just take that off. It's a brand new one, so it's fine. Okay. So we're looking at for example, the current weekly.
Yeah.
I need that to get liquidated, obviously. So we go on the 1 day. So it's still not really ready yet. Let's go back. H1, 1H. And there we go. So you need to match the time frame with the actual time frame.
Does it sync up automatically? If you click the little drop down where it says 1 hour on the right.
On the right?
Yeah, on the bottom. Yeah, click on that. Normally there's an option where you can sync them up.
No.
Oh, strange.
I can't see it. Okay, so this is an example. You need to take your time here, right?
Yeah.
That I probably would have missed a trade here. So already, this is the only thing with trades a lot. It's not like FX replay. With FX replay, you can't do this. You can't go back now.
No.
So now you're still going to get data, but the emotions from the backtesting is not going to be the same, right?
Yeah.
Which is really important, right? So this is the only thing with something like trades a lot. If you're backtesting on just TradingView, you can go back a few candles and you'll be sort of cheating yourself, but you'll still get the data. So if I now go on the M5,
just 5.
Just 5 M.
Yeah.
M5 and then go here, M5. Yeah, is that done? No. Yeah, it should just be M5, isn't it? Just 5.
Yes, 5, yeah, and then enter.
Enter, there we go.
Yes, yeah.
So now is in a point of interest. I know the weekly and the daily low is here, right?
Yeah.
Then I'll go candle by candle. You can actually press play now.
Yeah, and then do the speed on the left.
Exactly, yeah, you could do. Whoa, that was quick.
News.
What's that?
Is that 1:30 on a Friday by any chance?
This is 1:30 on a Friday, so there you go. And you can see the compression. Now already, this is not really a trade I'll take. It's too much of a big candle. But if I were to sort of gather some data, it would be the candle that broke the low.
Yeah.
But prior to that, obviously, I need if there's not a pattern there, then I can't really trade it? Have I got a pattern here? It looks like I do. So this is a bit of a valid trade for me, right? Not a good setup because it's too much of a big candle. But let's see if we've mixed a new low. Hold on. Okay, so it's broken that low, and I'll simply just do a limit order on that area. So let me just 44 pip stop loss. See, I wouldn't do this. To be fair, you know what? I'm going to skip this. It's too much of a big drop. I'm not going to do that. So we'll just wait. And yeah, we'll just wait, basically. Would have triggered, though, as you can see. It actually would have triggered. Can you see the retest over here?
Yeah.
The little retest, that would have been my entry. And stop loss would have just been 2 pips below there.
Why don't you go back just so we can show the the trade, so we can show how it would work in like. So this is what we're effectively doing is we're spotting these trades. So obviously Diego's strategy would have meant that he probably wouldn't have taken this trade. But if you were to take the trade, how does the trading tool work?
Yeah, so we'll go. You can remove this now. You know what? Let me just add it here real quick. Why is it not working now?
Got to put your quantity in.
That should work.
Next to the buy button. I'm assuming your units, is it?
Okay. Stop loss.
Nice. So this will be a nice little one. Was it 1 to 4, 1 to 3?
1, 2. No, it's not. It's not really. I'm not showing the full confluences. But if I go back to, let's go back to the daily real quick. Okay, so this is top of the range. Yeah, more or less on the 50 of the range, and then that will be my TP2. But this is a very, very bad. It's not a setup I'll take because obviously it's too much of a big drop prior to that. And there you go. Is it triggered?
I think you placed the market order. I think you're already in.
Yeah. Cool. And then you just continue pressing play. So you're in profit. Now, obviously, what I would be doing is I'll also be monitoring the stop loss. And for me to do the stop loss, what's the time frame? There we go, 15. Okay, so it's broken structure here. Let me just separate this, move it out of the way. And I need to wait for 2 counter candles for it to form a high. Oh, so annoying. Good trade, but let's do another one. But does that make sense, everyone, how to sort of do a back test?
Yeah, I think that makes sense. I think for the purpose of this session, it's just really how it's less about your strategy, isn't it? And it's more about how the tools work. So what these tools effectively give you the ability to do, guys, and girls, is to effectively backtest your strategy. And as you've seen there with Diego, he's been able to physically place a trade, activate that trade as if it were live market conditions. Now there's variables. I mean, look, you can cheat the system if you want to, as in you could go back and you could study price. Diego's gone back a few candles for the purposes of this, but in a live backtesting session, you probably wouldn't want to go back a few candles because you want to make sure that you're if you miss a trade in real life environments, you can't go back, of course. So it's a really good tool. It works really well. Sometimes I'll have some great sessions on it. Sometimes as well, like Lawrence acknowledged earlier, sometimes you find that maybe you're not following your exact process. The downside sometimes with these tools is that you put yourself in a position where, how to word this, you don't give yourself enough time to analyze. I think that's one of the big issues that some people find, is that because chart moves so quickly, you might go from one day to the next in 30 seconds. And in doing so, you might then miss how prices moved, how quickly it's moved to certain areas. You spend a lot of time analyzing when you're waiting for a trade to set up. You spend a lot of time analyzing your higher time frame and your medium time frames, and mentally supporting your own trade as well. So that's just one of the things that you've got to watch out for on these tools, is that you've got to make sure that if you are using them, you've got to be trading them exactly like you would try and trade them in a live market condition, or keep those variables and those setups as close to live market conditions as you can. Boss lady in the house, welcome. Boss lady, welcome back. We missed you last week. So welcome back. What's your interest to find out what your backtesting process is? Whether you backtest, what tools you use. Do you have a basic journal? What is it that you use? Let us know. And the rest of you as well in the comments as well. We have very lucky to have a few key people that support us on these channels. Support us on this chat and talk to us every single session. But those of you who are sitting there in the background, just come and say hello. We really want to speak to you and find out what you're doing, how you're doing it, etc. So please jump into the chat. Let us know what your backtesting process is, whether you backtest, whether you don't backtest. And come and ask us questions as well.
Absolutely. And also regarding just the time, I think you mentioned it briefly, Chris. The time to trade is really important. I mean, you just naturally obviously saw, is that 1:30, right? And it was actually bang on 1:30, right? Just 30 minutes after New York Open.
Mm-hmm.
And with my setup, with the fake out of the Trendline tap, it's kind of no coincidence is that the setup normally comes around these times. New York Open, 1:30, around 2 p.m. And because you've got the data, then you take the trade. If this boomerang with the Elliott waves and the fake out of the 1, 2, 3, 4, 5, if this was 5 p.m., 90% sure it's going to be a bit of a bad trade. So know what sessions you trade, know the times that you need to trade, know how long you hold the trade, and also at what point would the trade reverse, roughly around what time, just stuff like that you need to be aware of.
100%. What would you say is the best way to develop a backtesting strategy? So for you, obviously with me, I'm doing like kind of daily backtesting. Every time I take a trade, I'm then taking a couple of trades to go and kind of support that trade. What would you say for you is the best way to develop? Or do you have something different that you do? How do you backtest? How do you teach your students to backtest? What's the kind of the general process that you recommend, Diego?
I think the first step would be to sort of cherry pick the setup that you're looking for first. Let me just change the camera real quick. It's a little bit annoying. But sort of cherry pick. I wouldn't recommend backtesting at first. So if you can
testing.
Cherry picking, So for example, just going back in time and just hand picking the trades that have played out based on your strategy. Gather muscle memory, gather confidence, and then I would recommend to do a backtest where it's not hindsight. You don't know what's going to happen next, and you press play really slowly in the candlesticks, or you've got FX replay, so you've got no excuse. That's the next sort of step. Once you've done the backtest, around 50 trades to probably 100 trades is more than enough. But then you need to sort of split it into different sectors, such as the duration of your trades. Just make a note somewhere. By the way, this is just the beginning, right? After, when you've got experience, you reduce 90% of the factors that you implement just to save time. But in the beginning, you need to know how long is the drawdown, how often, how long do you go in drawdown before a trade hits your stop loss, right? So if you're in drawdown for like an hour, what's the probability of that trade hitting your stop loss? Normally with me, if I'm in drawdown for like an hour, the chances of me having a losing trade is like 80%. So I'll probably close it. I'll probably close it around 0.5 R. But when I'm in a little bit of drawdown, 0.1, 0.2, normally those are the trades that goes into profit, and I can quickly put into break even. So just knowing everything about the strategy, if you can put that somewhere, then you've got all the data, right? then the next step would be to sort of start going it one step further and start backtesting different pairs, different times, or just taking the information out and actually implementing it with the live markets on a demo, and just go back and forth, back and forth, back and forth. That's what I normally recommend.
What do you use from a journaling perspective? What do you use typically? Do you use like a spreadsheet? I know you use TradeZella, but for people that are coming to you that haven't traded before, what are you recommending that they use typically?
I would recommend to use Notion. So you can have the same, exactly the same metrics as on TradeZella. It's just not automated. You have to physically just update it. So Notion is free. You can do everything. You can tag the times your trade has been triggered in, or how often, how the duration of the trade. You can tag the setup. You can tag everything. So when you go back into Notion, you just press on that tag, and it's going to highlight every trade based on that tag. Right. It could be emotions. It could be whatever. So Notion, I'll definitely recommend it. It's free as well. I've been using that for years. I recommend Notion.
Yeah, it's quite good because you can then go into the trade itself and put a lot of detail into it, can't you, as well? I used Notion for a while, and then I suppose there's not really a downside. It can be more time consuming, Notion, can't it, to fill out. And for me now, I just want to kind of be quickly in and out, logging the trades. I think spreadsheets. I think you've got to play around with both, right? You've got to work out what works right for you and what works well for you. Play around with both options and see what works. And again, it's all data collection, because now you're not just analyzing the data of your trades. You're now analyzing the data of how you log your trades, because you'll have you'll have journal templates on Notion. You'll have journal templates on Excel. You'll have journal tools like the CTI dashboard, like the TradeZella that you were using, but one might work for you. For example, if one allows you to backtest more, as in you like using it and the interface is easy, and therefore you more willingly and you actually spend more time backtesting, then that works better for you. You might have the best Notion template in the world, but if you don't like using it, and it stops you from using it, then it doesn't work. This is, it's all data, right? And even to the extent of how you log your trades and what you feel most comfortable with, that's new data that you can use, and you can develop and build upon. What would you say are your biggest? Can you think of any key moments in your backtesting history, if you want to call it that you've big revelations or big changes that you've then implemented as a result of your backtesting? What would you say the biggest, like maybe your top 2 or your top 3 changes you've made because of backtesting?
It would probably be, it'll probably be the patterns, because I'm a pattern trader and Elliott waves. So I used to trade channels, expanding patterns, parallel channels, wedges, and I found out that wedges, for example, bear in mind I do trade SMC and Elliott waves, but for me, my little niche is the patterns. I found out with wedges they're more effective because they have a stronger breakout. So what I did is I just removed all the other patterns and I just focused on wedges. Then I started to backtest wedges, and I backtested certain angles of the wedge and the duration of the wedge. And I got some data from that, extracted it. So now I just stick to a very specific wedge at a very specific time, specific amount of candlesticks, or how long that wedge is, with all the other confluences, liquidity and SMC. And I think that for me was a massive sort of turning point. It improved my win rate a lot. To be fair. So how about yourself?
For me, it was understanding that supply and demand isn't as profitable as I was told it was. So I was very much an SMC supply and demand trader. And, I did various courses and YouTube courses and paid for mentorships. And I just couldn't find a way to make it work. And through my journal, I acknowledged the fact that actually every time I take a trade, a certain thing happens that makes my trade fail. Well, what if I basically trade in line with that certain thing? And for me, it was liquidity moves. So I would find that supply and demand zones were typically swept before they created the reaction, so the sell off or the buyback up that you were looking for, that I was looking for in the supply and demand zone. And it opened my eyes to thinking, actually, my trading strategy works better when it fails. But it was only because having that data there and available that I could go through and review. Because I don't know about you, but once I've got a load of trades logged, so I'll show you. It's probably easier if I show you. Let me just load up my screens again. Once I've got a load of data logged, I'll just use my strategy tester for now. Don't worry too much about the data because that is less relevant. So go on there. Come on. So once I've got my data logged, what I'll then do is I'll go through. So there's like a couple of losing trades down here, I believe. And I'll look at like my losers and I'll be like, right, why did that lose? Well, on this trade, I can see very quickly I'm buying really high. And whilst my trade setup is technically valid, it's actually very high up in this range. Therefore, maybe I should have been looking for sells. And then I'll go down and I would look at my losses more than anything else. But why did that fail? Well, this trade failed because it was obviously correctively pulling back. We were quite low after a move. Yes, we caught a buyback up, but we were quite low after a move. Did I have enough confirmation on the lower time frame to support my trade? Maybe not. And for me, going through my losses is really, really important because, I'm just looking at these 3 trades in particular. All 3 of them, this one was too high, this one was too low, this one was too low. Okay, so they're all reasons for me to maybe think, well, I need to wait for, bigger pullbacks before I take trades. I need to wait for a bigger pullback before I take a trade. Let's have a look at this one. So these are valid. These are sell-offs now. But this first one lost just because, well, maybe I didn't wait for enough. I didn't wait for enough confirmation. I hadn't waited for a full structure shift. So the beauty of having this data all logged is because then you can go back, you can revise that data and review that data. And you can then also look at your winning trades. So if I go in and look at maybe some winning trades, I'll have a look at this one here, for example. Okay, why did that work? Well, clearly momentum had shifted bearish. I'm trading in line with a continuation pattern. Let's have a look at this one. Same thing here. Clearly momentum is bearish. These trades are taken a little bit later, right? So these trades are taken in the middle of a bearish run. These trades, the bottom of a run, top of a run, bottom of a run. So, it then even just that moment there, looking at those 5 trades, I've already acknowledged the reasons why maybe my losers didn't need to be losers. And I can then start filtering these things out, going from there. So, the data for me is really, really important because it allows me to spot patterns of things that I should be ultimately cutting out. That was one big revelation for me. The other big revelation is that I need to hold my trades longer. So my data shows me, and I've got something quite unique, I know. My data shows me if I took a trade and I held it to 2R, the spreadsheet that I've built tests that strategy to see if it goes to 4R. Okay, you just log it, you put it in there, and then over time it tells you. So my data shows me that although I go for 2R and I'm profitable with 2R, actually I could be a little bit more profitable. Not a huge amount, but I could be a little bit more profitable if I hold to. Now, the downside with that is that my win rate goes down. My win rate goes from 70%.
Is it worth it? That's the thing.
Exactly. That's the thing. If I'm losing 20% more of my trades opposed to how I'm currently losing it, like, am I making enough money now? Well, yeah, I am making enough money. Would I like more? Yes, of course. Would the psychological impact of those bigger, so the psychological impact of losing more trades but winning higher, would that be better or worse? For me, that would be worse, because if I'm losing more trades, I'm more likely to revenge trade or make mistakes, A. Okay. B, if I see my trade heading for 4, but get into 3.9 and then reversing on me back up to 1, am I going to close that early? Probably. Okay. Whereas the strategy tester has no emotions. So it will either hit 4 or it will hit -1. Okay. So it has no emotions. So it's the perfect trading machine. We're not perfect trading machines. We have control over it. So, but again, it's all data that I can use. I can acknowledge the fact that I can make a little bit more money. Look, if my results are saying to me that instead of over 2 months where I've made 10%, I could make 30%, well, then obviously I need to make some changes. But my results show me that instead of making 10%, I could have made 12%. That's what my results show me. If I hold my trades for longer, my win rate goes down, but what I actually make off the trades goes up. I'm happy to sacrifice that 2%. I'm happy to sacrifice it
absolutely
to get more wins ultimately.
Yeah, absolutely, 100%.
Boss lady, we've not heard from you. You came in, good morning, and you disappeared. What's your backtesting process? What do you use? Do you use any tools? Amjad, welcome, dude. Good to have you on here. Amjad, what do you use? What do you use to backtest? And how do you log your trades? So look, it'd be good to hear from you guys. So look, we're coming to the end of the session. So we've got obviously a Q&A session. Always, you're welcome to come in and ask us questions. We want you guys to interact. If you have any questions for us, now's the time to ask for them. We've got 3 or 4 minutes. Yeah, boss lady, you will be sorry, mate. You will be sorry. No, it's no problem at all. I'm sure you're very busy trading, making loads of money in gold. And what would you say the key takeaways are today? So if you were to give like the top 3 things that everyone needs to start doing if they're not doing it, what would it be?
The first one will be to backtest.
Make sure you're backtesting. Little and often, right?
Yeah, 100%. Yeah, that's it. That's one. What else would you say?
Yeah, so I think we need to be backtesting. Okay, if you're not doing it, you're not going back and you're watching and waiting to see your trades play out. Like if you're trading in live markets, you might have 1 or 2 opportunities a day to test your strategy. Well, in your backtesting, in your hindsight testing, you can go back and you can test 2 weeks worth of data in 10 minutes. It could be that quick. So you need to.
Also, I wanted to say something just before I forget. Something important that we missed out is when you're backtesting, you want to also not just backtest the conditions that you trade based on the session that you live in, but also the conditions of the prop firm challenge rules that you're trading upon, right? So if you're trading, let's say you're doing a challenge with CTI or whatever, but then you're taking trades in Asia and you're making crazy profits, that's not going to reflect when you actually do the challenge. So when you do backtesting, you have to make sure that you're implementing the rules with the prop firm.
Yeah,
regardless of the amount of trades, implement the drawdown, everything. Treat it like an actual challenge. That's extremely important. And I used to do that all the time.
Yeah,
or just sign up to free challenges and just trade like a forward test. You just trade. So just implement the challenge rules. That's really important, everyone.
Definitely. I think also you need to make sure that you're logging those trades somewhere. You don't have to use a fancy tool. You don't have to spend money on it. You could build, like any single one of you could go onto Google Sheets right now and build a really simple table where you can log your trades and just start with that. Like, I think sometimes we overcomplicate it because we're like, well, it's not going to look as good as those ones I've seen on this session today. It's not going to look as good as a fancy Notion. It doesn't need to look as good as anything. It just needs to be gathering data. It just means that, you then start acknowledging and reviewing what you're doing as a trader. Okay, this is your analysis. This is like if you worked for, I don't know, if you ran a business where you were selling a product, this is your sales report. This is working out when you're good at selling, when you're bad at selling, when you should be selling. And then what you do with that data is you double down on the things that work well and you remove the things that don't work well. That's all it is. It just helps you with the trial and error of becoming an experienced trader. What about number 3 then? So make sure you're backtesting little and often. Make sure you're recording those trades. Third takeaway from today.
Probably have efficient backtesting. So maybe do 30 minutes to 1 hour, and the moment you mentally feel that you're getting drained, immediately stop, because then you're more prone to errors, and if you're prone to errors, you're going to get wrong results and just bad work results. So I'll say that for the third one.
Yeah, definitely. Yeah, I think that links in with little and often, doesn't it? Just making sure that you're making sure it's effective. It's got to serve a purpose, right? It's got to be a reason why you're doing it. You're not just doing it because we've told you. You're not just doing it because you know that you should. You should be doing it with a goal in mind. My goal is to increase my win rate. My goal is to make more money out of my trades. My goal is to maximize my opportunities, whatever it may be. Okay, maybe you just trade London session. You want to see how effective New York session is. You can go and just backtest New York session for the last however many months. So there's loads of uses for it, and hopefully that's been helpful for you guys today. That was a good session. I like that, Diego.
No, good session for sure. It was actually fun. Very informative.
Yeah, it was good. And look, thank you for those of you that jumped on and said hello. We really, really appreciate you guys interacting with us. It makes these much more interesting and engaging for us. We'd love to hear how next week, how you've been implementing these changes. So make sure you come back next week, Monday, 12:30 UK time. Tell us how you got on, what you'd implemented, what you've improved, what you've brought in as a result of today. And other than that, thank you. Make sure you subscribe to the channel on YouTube. And next time, if you've been sitting there thinking, do you know what, I want to post a comment or I want to say something to guys, please, we love it. We love hearing from you guys. Make sure you come and say hello to us and comment in the chat so that we can interact with you, because that makes these sessions all the more engaging for us as well.
Absolutely. So yeah, on that note, everyone, take backtesting serious and go on backtest, right?
Yeah.
Honestly, do it. You have to do it. So yeah, well, we'll see you guys next week. Also,
see you next week. Cheers, Diego. Have a good week, dude.
Take care, bye.
Bye.